What is up, everyone? Bitcoin hit $70,200 yesterday. So let's talk about that. Plus, I also want to discuss what is going on with NVDA and the 10% drop it saw yesterday, as well as what asset classes are going to zero. I also want to discuss gold and some other altcoins you should be looking to buy during this bull run cycle. All right, guys, if that sounds good to you, be sure to hit the like button. Be sure to subscribe if you want to see more, and let's get started. So, as you can see, Bitcoin hit a price of $70,200 yesterday before correcting and coming back and is now setting around the $68,500 range, and it is still looking strong. As you can see down here on this RSI indicator, we got towards the upper side on the RSI around 70, and now we are back down around 55 on the RSI. So right now, things are looking good for Bitcoin. But let's discuss what happened to NVIDIA yesterday. As we know, NVIDIA has been on this monstrous run, and yesterday, NVIDIA fell over 10%. And so right now, the strongest stock in the world is looking a little weak. So where could NVIDIA go? Well, the most obvious answer would be this 20-day moving average. So it could see another pullback of about $75 down to around this $800 range in the short term. And I mentioned this the other day on a video that I thought NVIDIA was going to see a pullback as soon as next week, but it came on Friday. And one reason that is this moon indicator, lunar cycle phase seems to play in the markets. And once you understand market psychology and human nature and the cycles, natural cycles in this world, then you can become a day trader. I strongly believe that. I know some of the best calls I've ever made in my life have resulted around from just observing what was going on, in the economy, the way people were acting, and the full moon. Full moons, people get a little wild, they get crazy, and that tends to lead to upside in the markets, according to this indicator, as well as downsides whenever there is a new moon, and that is coming tonight. So I suspect NVIDIA is going to see further pullbacks here. I think over the long term, we're probably really going to see some pullbacks, probably of maybe 30-40% on NVIDIA, given this just historic run it has had. And so we could see NVIDIA coming back down to, possibly $700, $600, or even lower, before finding some real support. But in the short term, I think we see a short pullback, but this market still has momentum, so it could still go higher. So let's talk about which asset classes are going to zero. Well, first off, this is a chart of the dollar versus the S&P. And you can see over the past decade, since March in 2014 to March 2024. So here we were on March 12th, 2014, and the dollar versus the S&P is down 53%. Now, this is why people invest in the stock market, you know, set up retirement accounts, because historically, if you invest in the S&P, you gain about 8 to 10% return on your money. And so that has a compounding effect over the long term. You know, over 10, 20, 30 years, that can really allow your money to grow. But in 2021, what we saw with inflation, the S&P could not even keep up with. You know, I think it's a good idea if you've got a lot of cash to move it into something that is going to make you higher interest rates, um, such as maybe Treasury or CD or even just the S&P in general. I think it's a good idea. But like I said, after 2021, the inflation we saw, I'm thinking that's not such a good idea anymore, because not only is the dollar declining to the S&P is declining to the Qs. That is the Nasdaq, the top 100 tech stocks, and tech stocks have done amazing in the past year. But look at this. This is another chart of the S&P versus the Qs from March 2014 to March 2024. Over the past 10 years, the S&P has lost 44% of its value relative to the Qs. So not only is the dollar getting weaker, the S&P is getting weaker relative to the Qs. And it gets worse. The Qs, over that same 10-year period. So we've got February 14, here we go, March of 2014. To Bitcoin. The Qs are down 98% relative to Bitcoin. Now, like I said before, I've heard a lot about Bitcoin. It really wasn't until the last couple years that I really started to study on it and understand. And once I realized all asset classes are going to zero versus Bitcoin, then to me, this was a no-brainer. Because I remember thinking before I left my job that, you know, I seen relatives who had worked all their entire life, you know, to save up in a retirement account only to get to retirement and then have to live a lesser lifestyle than when they are working, because their money was eroded in value over time as the governments and other countries just continue to print money. So that is why I have been getting into Bitcoin. And I think a lot of people are starting to wake up to the fact that the only way we're going to be able to outpace inflation is to invest in assets that make greater returns than the rate of inflation. You can work hard, and I think people should work hard to, build a life and all that, but you only have so many hours in a day, and there's only so much you can do. So I think that it probably is wise to look at some sort of allocation to Bitcoin, or at least some sort of investments that allows your wealth to grow over time and outpace inflation. So let's discuss where we are at in this Bitcoin cycle. We know that the halving is just around the corner. And sorry, guys, my internet has been extremely slow today. So I don't know if this is going to pull up or not. Well, here we go. So where are we in this Bitcoin cycle? Well, as I mentioned, we're coming into the halving, and we're just starting to enter the yellow band on this chart rainbow. And so this is really the hodl zone. This is where you want to have been accumulating really over the past year and a half, 2 years. That was all your great buying zones. But I think at this point, it's probably still relatively safe to dollar cost average and keep buying Bitcoin. Because we know once the halving happens, supply will be reduced by half. Institutions are buying at unprecedented rates, possibly creating a super cycle. This cycle was taken off unlike any of the previous cycles. Normally, during the halving cycle, you're down around those all-time lows and just kind of moving sideways, maybe just slightly up, but generally you're in a good buy zone. This time, you're already probably to what I would can say is my conservative estimate of about $120,000 on this cycle. You're about halfway there. So I think it's probably relatively safe to still dollar cost average, but this cycle could be quicker. And we could see this cycle top out even sooner. It may go higher, but what happens in these cycles is the money, the liquidity, first goes into Bitcoin and then the other altcoins. And we'll discuss more about that in a minute. But one thing I wanted to discuss was the global liquidity cycle, because this is important in any market. And this is something that I've really only begun to understand over the last maybe 4 or 5 years. Because I've flipped houses before. I remember what it was like during the 2008 and 9 financial crisis, when all real estate and the stock market and everything plummeted, and the amount of uncertainty and fear during that time. Um, yeah, it was hard. It was hard for a lot of people. But this is the global liquidity cycle, and right now what is going on is the Federal Reserve has raised interest rates starting back at the end of 2021 into 2022 and tightening up on the amount of liquidity in the system. This has slowed everything down. This is why the markets went down in 2022, but it has bottomed out and it's starting to turn up. So I think probably what we're going to see here is the rates are going to start to slow down, and it's probably because the economy is starting to slow down due to this tightening cycle. And so as the rates slow down, that's good for small cap stocks and risk assets. I think after that, things could get really tough, but I think over the period of the next 12 to 18 months, we probably will be in a pretty good position because the economy has remained really pretty strong over this entire tightening cycle. So, what's that mean for some of these other alternative assets? Wow. All right. Sorry, guys. Internet is just horrible today. But the first asset I wanted to talk about is gold here. If the chart decides to pull up, hmm. So gold broke to a new all-time high. I'll give that chart a second to pull up, but this is a gold miner that I mentioned the other day, Newmont Mining. And I mentioned this here as this bounced off this line of resistance, which was the low from back in 2019, and put placed a transaction on this company, and up about 6% over the past week or so since I bought this stock. And it also has a dividend of about 4.3% currently. Um, so, not only are you potentially going to get a return on your investment, you're also getting a dividend on top of that. And I think gold prices are going a lot higher. And if that happens, this stock could make some amazing returns. I think you could see this stock go uh, easily back up to the $50 range. This stock was up over $80 back in 2021. And so I think there's a lot of upside potential for this stock. But the other thing I want to show you on gold, if this chart will pull up, and it's going back to my default settings here. But there's something here really important I want to show you because I discovered a um, longer term pattern that is beginning to play out on gold. So let's just take a look at gold. We'll pull it up here again. And hopefully this still has, it does not, I don't think, but that's okay. I will show you what I was looking at. And so let's go to the monthly on gold. It does. All right, so this is the gold chart from back in the 1960s to today. And as you can see here in 2010, we know the ETF on gold launched. Back in 2004, I believe, we saw this massive rally up. Then we went sideways here to down for about 10 years from 2010 to 20 before it started going back up during COVID. But what this is in traders' terms, a cup and handle. And that's a bullish sign for gold. And not only do you have this cup and handle, If we go to the weekly chart on gold, we also have an inverse head and shoulders. Look at this, guys. We got a shoulder here, we got a head, and then the right shoulder, and this is also bullish consolidation, a bullish sign for the gold market. And so if we take a measurement here from the neckline on this head and shoulders pattern down to the bottom, we take that and move that up to here, well, then you can see gold is going much higher. And I think gold will probably go to 24 to 25 $100 per ounce, or possibly even 3,000, given this bigger cup and handle pattern. Gold hasn't done a whole lot really in the last 14 years since back here in 2011, so 13 years. And so I think it's very bullish for gold. That's why I showed you the new mining chart, because I think that is a good stock that can make you a solid return. Another chart I wanted to bring up was the MicroStrategy chart, and MicroStrategy has just been absolutely killing it. Over the past couple months, it's been outperforming Bitcoin nearly by 100%. So doing a 2x over Bitcoin. And MicroStrategy, when Bitcoin ran up yesterday, peaked at around $1,425. And so I think that is a really good way to play Bitcoin if you have an IRA or some sort of app where you can buy and trade stocks and funds, such as maybe Robinhood. But I do want to mention that I took some profits on MicroStrategy yesterday, just because we've already seen so much run up in Bitcoin in these markets. Like I said, I think maybe short term we may see things cool off a little bit, especially in the stock market. I don't think so much in Bitcoin right now. I think Bitcoin is still strong. But I wanted to take profits because of what I mentioned earlier in the video, which is in these markets, the capital comes into Bitcoin, and then it flows into Ethereum and some of these other altcoins. And so I wanted to be able to take advantage of that, because you're going to begin to see probably some of these other altcoins and Ethereum starting to outperform Bitcoin. So that's why I took profits on MicroStrategy. Here is the Ethereum chart. We just hit 3,900 on Ethereum. You can see Ethereum going much higher. I definitely think we'll see Ethereum probably hit 7 or 8,000 this cycle, as long as nothing happens major and this cycle gets cut short somehow. But I see a lot more potential for Ethereum, especially here over the next 6 months or so, as money begins rolling out of Bitcoin into some of these other altcoins. Another coin is Solana. Solana really took off early during this Bitcoin bull cycle, but it's been consolidating for a while. It really hasn't done too much over the past several weeks. Down here, whenever it was getting down around $90, some people thought maybe it was coming down to 70. I thought we may come down again test the $80 mark, $70, $75, but we didn't. We continued to go higher, and it just broke this next line of resistance here at 133. It's setting at 145. So what does that mean for Solana? Well, there's really not much resistance left, and it's probably getting ready to go up to this 170 to $180, $180 per coin. And I think right now is probably a good time to start looking for entries. If this comes back down to this line and tests this 132, 133, I think that's probably a good place to buy in. So Solana looks like it could be getting ready to heat up for another leg up. And another coin is AVEX, another layer one. They seem to kind of have lagged in this market, but are starting to show some signs of strength. And they've got a lot of good things going on in their ecosystem, such as gaming. And I think that's going to be AI and gaming are probably going to be the big narratives during this crypto bull cycle, I do believe. And so right now, AVEX is setting at $43 a coin. I think anywhere between this zone where it's at and this previous line of resistance down here around $30 is a good entry spot buy. But then once it breaks out of here, it looks like it's wanting to go to the $56 to $64 price range. So you could see easily another 25% up on AVEX, probably relatively soon over the next couple months. Beyond that, it's going to go much higher, probably really looking up around the $82 level or $90 level. Another coin I wanted to mention is Algorand. And Algorand has been one of these laggards, hasn't really done much. As you can see, it's been down here in this long phase of accumulation over the past couple years, and it's just getting ready to break out of that. Once it breaks out of this 27-cent area, it could go up to 43 cents pretty quickly. So that is, over 30% gain on Algorand, ticker ALGO. And then after that, you could see this go up to the 66 to 80 cent range. So this coin could easily do probably a 3 to 5x, really just to get back to its previous all-time highs. And of course, this chart is not wanting to finish loading up, but that's okay because I think this is going to be one of those good solid coins that you could easily see a 3 to 5x on, if not more. And let me just try to pull up the weekly here so we can take a better look at this and just get a better look at where this is going. All right, guys, I don't know what's going on here at the internet. It's been bad weather. It's been raining all night last night, all day today. It's just been bad weather. But anyway, I could see Algorand going much higher. And that's why I wanted to mention how can you get access to these other layer ones as money continues to flow from Bitcoin into Ethereum and these other altcoins. And to me, that's I Trust Capital. That's another reason I took profits on MicroStrategy this week is to allocate an additional 5% to some of these layer ones. And I Trust Capital is an IRA that allows you to roll over a portion or all of your 401k or IRA into I Trust Capital in a tax advantage IRA account. So if you're someone that has a 401k or an IRA, I think this is a good way to get access to Bitcoin and some of these other layer ones if you want to gain some exposure to the crypto market. As I mentioned, there are other funds out there such as MicroStrategy, and we know Fidelity and BlackRock have created these ETFs based around Bitcoin, but the majority of the bull cycle is going to start shifting to these other layer ones. So that's why I wanted to mention I Trust Capital. They've been great, and it's a good way if you have an IRA or 401k to allocate even just a small percentage. I'm only putting 5% into my I Trust Capital account. I still like to play it relatively safe, even though I am moving further towards digital currency assets because of what is going on with the dollar and in the stock market. So I Trust Capital. If you want to get started, there's a link down below. You can click that. That's my referral link. You also get a $100 bonus whenever you sign up with iTrust. And it's also a good way if you're just getting started in investing and want to start building a retirement account that you can just dollar cost average into. All right, guys, that is all for me here on Saturday. I've got some other things I got to go do. But anyway, until next time, guys.